Did you know that you can generate consistent income from the stock market without predicting whether the stock is going to go up or down? That's right, you don't need a crystal ball, insider tips, or even perfect timing to start generating income from the stock market. Instead, you can leverage a powerful strategy that's used by professional traders every day. It's called selling options, and it could be your ticket to consistent cash flow even in unpredictable markets. Stick around, because I'm revealing how this strategy works and how it can be your ticket to consistent cash flow and financial freedom. On top of that, at the end of this video, I'm going to show you an export from my Robinhood brokerage account on what we made for the month of December. Now, option selling might sound complicated at first, but trust me, it's one of the most powerful strategies for building long-term wealth. And here's the kicker. While buying options is like gambling on the market's next big move, and many traders lose doing this, selling options, you become the house and you control the way the market's going. This essentially flips the script and allows you to be in control of the theta and time decay. Because remember, when you're gambling, the house always wins, so it's better to be the house than the individual buyer that's gambling. Selling options is all about stacking the odds in your favor and collecting your cash or premium up front. So let me show you why selling options is a game changer. When you're selling options, you get paid up front rather than buying options where you're hoping the stock moves more favorable in the way you're predicting, and that's the only way you get paid when you're buying options. Another beauty of selling options is every day that passes is in your favor. The opposite is true when you're buying options. When you are buying options, it's only in your favor if the stock is moving in the direction you need it to at a certain rate or a certain pace by the expiration date. Whereas when you're selling options, every day that goes by, it goes up, goes down. That's wonderful. You're probably asking, why is this? How can stocks lose value over each day? Well, this thing called time decay. Every day that goes by and it gets closer to the expiration date, the value of that asset decreases for the buyer and increases for the seller. And again, you're the seller, you're the house. And that goes back to you don't need to predict the next big move, because when you're buying, you do. When you're selling, it doesn't need to move a lot. It can move a little, it can stay flat, whatever it may be. You are collecting that cash up front. And when you're selling options, you're taking the guesswork out. Like I said, you're not trying to predict whether the stock goes up or down. No, rather you're taking a calculated risk on a company that you're interested in, and you are agreeing to buy it by a predetermined price before the expiration date. And because of that, you are collecting a premium up front. It's like getting paid your rent money every week or every month over and over again. Okay, we're going to go through a live example here, and in the background you'll see I'm going to trade options on FCEL. It's a fuel cell, it's an energy stock. I like to go 2 to 3 weeks out. Make sure you have your sell and put options selected at the top there, and then I'm going to pick the $9 strike. What that means is I'm agreeing to buy this stock for $9 by 117. So if by 117 that stock is below $9, I still have to buy it for $9. If it stays above it, I don't have to. But either way, I collect that $95 of credit. So just because I'm agreeing to buy a stock ahead of time, I am rewarded a credit. It takes the guesswork out, and like I said, stocks you want to own or you're okay with owning, whether you get assigned that stock or not, it's a win-win either way because you collect that credit. If you don't get assigned and the stock, let's say, closes at $9.01 on 1/17/2025, which can't believe, Happy New Year's to all of you. If it stays above that $9, the stock expires worthless, the contract expires worthless, you still keep that $95. If the stock would go below $9, you would have to purchase for $9. But that's okay, because then you will sell a covered call, which means you agree to sell the stock for that $9 price ahead of time. So let's say you sell it for February 17th, and you collect an additional $100 for agreeing to sell it ahead of time. It's called the wheel strategy, and it just prints money for you every week, week over week, month over month. Easiest way to generate income. Take out the guesswork, put away the charts, and just enjoy your free time. Now, Selling options is not without risk. Just like investing in your own personal business, investing in your own brand, investing in real estate, investing in the market in any way, shape, or form, there are always risks involved. Because remember, there's no such thing as a guaranteed win. But with selling options, with the right tools and techniques, you can greatly minimize any risks that would come your way. First, proper sizing of your portfolio. Everyone will give you a varying percentage on what amount you should put in. I'm not going to give you should say 1%, 10%, because everyone's risk tolerance is different. You need to put an amount in that you feel comfortable. Remember, when you're selling options, you're agreeing to buy a stock for a predetermined price. So make sure you're only selling options on companies you're okay with owning, whether it's Starbucks or Walmart or whatever it may be. Make sure you're selling options on companies you're interested in owning, because that greatly takes the risk. Even if you're assigned the stock, you're okay selling covered calls on the other side against it, because again, you are printing money. So sizing your portfolio for an adequate risk that makes you feel comfortable. By sizing, you are essentially creating your own financial safety net, because you're not going to allow one trade to derail your account. The amount of times I've seen or I've heard people buying options and putting exorbitant amounts, maybe 50, 60, 70, 80% of their account into an option because they're so sure it's going to go up, because so many people on social media were talking about it and their account blew up. Don't do that. Size accordingly. Find your own risk management. For me, I never put more than 5% in a trade, but some of my accounts I'm using are a little bit bigger. When I first started selling options, I was putting around 20% in there because, again, you need to generate some income and get the account growing. If you have $100 in there and you put 20% down into an investment, that is only $20. So that's what I mean by sizing your risk based on the size of your account. The goal is not to avoid risk completely. That's impossible. And you need to take risk to grow. But it is to minimize your risk by remembering to size accordingly and only sell options on stocks you're okay with owning. When you do that, in my eyes, there's no risk involved. Success in selling options is not about massive runs, overnight gains. Rather, it's playing the long, steady game to generate consistent premiums. View it this way. Every time you collect a premium or a credit, you are planting a seed for a garden. And over time, as you collect more and more premiums, you then have a huge garden of financial freedom. Every time you collect a premium or a credit, it's a win, and it adds up over time. Remember, at the end of this video, I'm going to show you what 1 month looks like of selling options. Like I said, this will be for the month of December. It's my Robinhood account here that I trade live on YouTube. All trades are open. Anyone can see. Full transparency. And I want you to see what passive, consistent income can look like. In my eyes, the most important lesson to be successful in the market and option selling is to be patient and be consistent. Do not try to get massive gains in one trade. It doesn't work like that when you're selling options. Sell them slow, sell them steady, collect those premiums week over week, month over month, and your year-to-date returns, rather than an index fund or your bank where it's like 3 to 10%, when you're selling options, you're looking closer to 50 to 60, upwards of 100% gains throughout the year of selling options. So again, be consistent. It adds up. Be patient. Don't just sell an option because you want to. Wait your time. Make sure you're okay with owning the company at that price before you sell that option, and be consistent. Regardless if you had a week or two that aren't where you want them to be consistent, stick with it. It will add up and you will succeed. Let this video be your call to action. It's time for you to take control of your financial freedom. And this is just the start. If you thought this content was helpful, make sure you check out some of my other videos. There's some where I show you exactly all the options I made for the day, exactly what you can do, what to look for, how you can find the best possible options to sell, and many other things like that. So make sure you check out some of the other videos on this channel. Make sure you leave a like, comment, subscribe, but don't go yet, because I'm still going to show you what we made this month in December on selling options, and then past that, I'm going to give you an opportunity and tell you how you can be entered for a chance to win $1,000. Now, you're probably wondering, what's going on behind me? What are these small little numbers and words? Well, this is the export from my Robinhood account, my brokerage account, showing every trade we made this month, all the options we sold from December 1st through December 31st. There's only one trade that's not on here. I collected a $50 premium right at $3.59 for selling FCEL fuel cell, the one I used in the example. But nonetheless, as we zoom in, we're scrolling the bottom here. That at the bottom there, $2,500, $2,531.84. That's what we made this month, selling options right here on YouTube. Passive income, easy to do, no stress, no charts, not trying to predict the future. Rather, I am just enjoying my financial freedom, taking the time, collecting my premium, watching it grow over time. Next month, we might sell 3,000, 4,000, who knows? It adds up over time. Now that you've made it to the end of this video, if you're still here, on one of my previous videos, I talked about from getting 1,000 subscribers, I'm doing a $1,000 giveaway. And on that video, you needed to comment 1,000 in order to be eligible for it. Well, if you comment, let's grow in 2025, your name will be added a second time to the randomizer generator that'll just randomly pick a name. And so you'll have 2 pieces of pie on that chart for your opportunity to win $1,000. So don't miss that. Like I said, don't give any spoilers away in the comments about just skip to the end and let them know. Just put this in your comment. You can comment any other thing, but make sure you put that as one of your comments. And if you have questions, put them as a separate comment, because I have a stock screener, or a screener that's going to pull your name and add it to that pie multiple times if you have the 1,000 comment on the 1,000 subscriber video and the Let's Win in 2025 comment in this video. So if you enjoyed this content, make sure you like, comment, subscribe, and let's continue to grow together.